Good morning, everyone. My name is Sean Laidlaw, and thanks for joining us for the first annual Awatea Investors Meeting. I'm joined by Jeff and Will Dickie, directors of Dickie NZ Ltd. Thanks, guys. Thanks for taking the time to join us this morning. We're excited to run through the first annual results for the Awatea Forest Fund and give you an outlook for your investment and for forestry moving forward. With us today, we've got Jeff Whitlock from Markham's Accounting, Roy Anderson from Forest Management New Zealand, and Steve Bell. Thanks for coming, guys. So today we're just going to run through, obviously we'll look at the annual financial results, and Jeff will take us through those for the fund. We'll take a look at the individual properties that we currently have within the fund. We'll have a look at the timber and carbon markets, how they look now and moving forward, and Jeff Dickie will give us an overview of the fund as it stands and what the outlook is. As we're moving forward, obviously some of you might have questions, and there's a Q&A box at the bottom of your screen if you want to enter them there. And as we move through the presentation, we'll try to get to one or two of them, but then at the end we have some time boxed off to run through those as well. So any we don't get to, we'll obviously be sending out this presentation and recording, so we'll endeavour to get to them there, and obviously you're more than welcome to contact us at any stage as well. Jeff, you want to take us through where the fund is as of now?
Yeah, good morning all. It's Jeff Dickie here, Dickie New Zealand. Welcome to those joining us, both here in New Zealand this morning, but also we have some from overseas, so it could be late afternoon or potentially even late evening for a few of you. As Sean says, the presentation will be made available after this, and also a recording of it. So never mind about that. And look, it's a pleasure to bring to you this inaugural Awatea Forest Fund investor presentation. I think I can say here on behalf of the team, it's been a very fulfilling mission for us, to design and structure the fund. And possibly we're biased in our opinion, but we really think that we've got the best product to market, providing long-term risk-adjusted returns to investors. I'm sure you've heard us say it a few times, but we believe there are three distinct advantages to the fund, or that the fund structure achieves. Firstly, diversification, and when we look at the likes of weather events and things of past very recent, the diversification is very important, and that's about multiple forests, multiple regions, focusing on different species, age classes, etc. Secondly is liquidity, pooling of investors, and also the ability to ultimately redeem from the fund as well. Thirdly, as well, was the fund structure really lets us focus on cash flow, and the fund has is obviously targeting to make distributions going forward, and so we can target harvest and carbon cash flows that work well, or the layering of those works well in the fund. Look, we're really pleased as well with the fund's performance to kick off. Naturally, forestry is a long-term investment, but we've managed to get out of the blocks well, and that's really owed to capitalising off some great market opportunities, and especially there's a benefit there of transacting as a New Zealand buyer. For the year to March 23, it was a busy one for forestry. There's obviously been a reasonable amount of volatility in both the log and carbon markets, and Steve and Will cover off some of that later on in this presentation. And as well, we had a few cyclones even thrown our way, and we're very pleased to see that the forests have come through that well. and despite public opinion, that might be telling you otherwise. Look, this presentation will firstly focus on the year in review, but secondly also the outlook for the fund. In terms of activities for the fund, we actually ended up settling 3 properties into the fund. Started off with Tikawawa, Matawai Hill, also in Gisborne, partway through the year, and then just prior to the end of the financial year, we settled Airstrip, which is a Bay of Plenty property. Since then, we have, during the year as well, Tikawawa was mostly planted, and Matawai received a small amount of planting. Since the end of the first year and to today, we've purchased another 3 properties for the funds, those being Goldstone, Kinloch, and Ngātoka. And Kinloch, in fact, is settling today. In terms of FMNZ will cover more on the planting program and the properties, but I think impressively we've established 922 hectares this season alone, and takes the established area up to 1,541 hectares for the fund as well. And just in terms of investor numbers, as at March 23, we had 143 investors in the fund. This has since grown, and an average investment parcel of 134,000. Net pre-tax return to March 23 plus 14.89%, taking unit price to $1.14.09. So I'll pass it on to Jeff Whitlock now, who will just take us through some of those salient points of the audited financials. Jeff, if you could take that away, please. Might be on mute.
Good morning, all. I'm going to start on page 3 of the financials, and you'll see at the top there that there's a small amount of grazing income. The expenses are scheduled on page 9, and that they total $666,000 there. And then there's the interest received on the funds that were invested prior to the settlement of the property purchases. So overall, as expected, there was a loss of $614,000 for the period. Offsetting that, the value of the trees have increased in value by $158,000. The value of the NZUs held have increased by another $111,000, and most importantly, the land values have increased in value by $2.87 million. So overall, there's a profit for the unit holders of $2,525,000. Which works out to $15.16 per unit holder. Coming down to page 4, you'll see that profit at the top there, and the next line down has the contributions from you investors totaling $16.8 million, minus the fund setup costs of $1.5 million. And then, under the perversities of the pie regime, because we made that loss on the previous page of $614,000, the fund itself gets a tax refund, even though we haven't paid any tax, of $164,000. So that gives the total equity of your unit holders to be $17.94 million, as at the bottom right of that page. And then if we come down to page 5, you'll see that at the end of March, the fund had $545,000 in cash, $481,000 of receivables, predominantly the land asset of $17.4 million, the growing forests of $1.3 million, and the intangibles of $1.3 million as well. Against that, there's some payables of $249,000 and a bank loan of $3 million, and that equates to the net assets on the previous page of 17.94 million. I think that's the salient points of the financials, but I'm very happy to answer any questions anyone might have.
Yeah, Jeff, can you, just for our investors, can you explain how the multi-pie rate works and how those units were adjusted at the end of the tax year?
Yes. Every investor has their own pie rate, which is determined on their individual circumstances. If you're an overseas investor, you have to have the 28% pie rate, but a New Zealand investor, depending on their other income, has a pie rate of either 0%, 10.5%, 17.5%, or 28%. And what that means is every time there's a distribution or a profit or loss allocation, the amount allocated is a gross amount minus your applicable pie rate to give a net amount. And one of the perversities of the pie regime is because there's a negative amount allocated this year, there's a negative pie rate that goes with it at that percentage. And then that net amount is either turned into extra units which are either issued or redeemed. And so everyone will have potentially a different redemption rate just because of their different pie rate. Hopefully that makes sense.
Yeah, that's good. Thank you very much.
Yeah.
So moving forward, Jeff, do you want to just give us a rundown of the current Awatea properties and how you see them stacking up?
Yeah, sure. So, look, Rory will take us through each of the properties and, planting and the specifics there. But, firstly, we just wanted to discuss the acquisitions that we have made and also just give you a little bit of an insight into what we're looking at when we are making acquisitions. So, as mentioned, the fund had 3 properties as at the end of the financial year, has recently expanded to 6. So those first 3 properties were Tikawawa and Matawai Hills up in the Gisborne region, you can see there. And then the third property to settle within the 23 financial year was Airstrip, which is up towards Tauranga at the top. Since then, we have added in Goldstone, just north of Napier and north of Panpack Sawmill there. And as I mentioned today, settling Kinloch in the central Hawke's Bay, and also there is Ngātoka, which is down in the Wairarapa region. So as you can see there, we're starting to really establish that diversification across good premium forest growing regions, 4 forest regions in total, and also across 4 export ports and 9 domestic sawmills. So as I say there, the diversification is starting to show through. When we look at our investments, we firstly look at investment criteria and then investment metrics. And so just to give you a bit of an insight, so in terms of investment criteria, we're always looking at the regions that we're investing in, whether the region fits, good rainfall, soils, reliable services and infrastructure, which are key to good investments and future-proofing investments. Then we look at, does the investment fit our policy and objectives? So does it fit with the overarching SIPO? Thirdly, does the structure of cash flows suit the funds? Does it fill buckets where we require those cash flows? And those different cash flows will depend on differing species, age classes, whether it's a carbon eligible property or not. And finally, is the return adequate for the property, for the location, and those specific features of the property? Then we start to look at the investment metrics, and first and foremost, of course, is internal rate of return. We're targeting 7 to 10% in terms of long-term returns, and so really that 7% becomes a benchmark for us. But also we like to look at a few other informative metrics. Firstly, purchase price per hectare, and so you'll see there in the table, we're averaging just under $13,000 per effective hectare, and the way we calculate this is it's the purchase price of the land less any asset sales that might come out of the land, and that's divided by the total amount of effective hectares to give us that rate. So you see there's some variations there, and those depend on growth rates that we're seeing in particular properties, distances to port, contour, etc. And secondly, another interesting one is also the present value cost of carbon. Basically, we discount back all other revenues and expenditures to establish what that present value of carbon cost is within each property. As you can see there, we're averaging around $25 across those properties. So, this sort of goes in line with the thinking that forestry is one of the most efficient capturers of carbon. And when we look here at $25 per NZU versus the current price today in the vicinity of $65 to $70, you can see that you're instantly adding benefit. Just in terms of those recent property acquisitions, we have been busy making sure that we get properties that we can plant this year. And as I mentioned, we've FMNZ's managed to source seedlings and plant and have the labour to establish 922 hectares for the fund. There's a couple of reasons why we've really pushed for that, and firstly, there's a time value of money component when planting. Planting this year versus waiting to next year has a material impact on those internal rate of returns. And secondly, there's an emissions trading scheme review ongoing at the moment. We've been very active in the consultation of this, and look, there's very firm guidance, we'd say, in terms of grandfathering of existing investments, and hence there's been a push to put trees in the ground earlier. And actually we'll cover off some of this under the carbon market side of things. Right now, I'll hand it off to Rory to take us through the individual properties. Thanks, Rory.
Cool. Thanks, Jeff. I'll just give a bit of an overview on FMNZ. We've been in operation since 1974, originally as Waverley Logging Company. We currently employ 28 full-time staff and have offices in Napier, Gisborne, Waverley, and the Wairarapa. We currently manage over 45,000 hectares of net stock dairy, predominantly Pinus radiata, and in recent times we harvest on average 800,000 to 1 million tonnes per annum and have a replanting program, so that's of the harvested area of around 1,000 to 1,100 hectares. Recent times with the emissions trading scheme and the advancement of greenfield properties, our annual planting program has been 4,000 hectares. More recently this year, this has been our largest planting season on record. Steve, on my right, has been with FMNZ since 1991, and he's seen from start to finish, and even seen through a full rotation. And I guess suffice to say, I guess he's pleased to see how it's gone. So we have planted 7.3 million seedlings, which works out to 7,355 hectares, and 81% of that was new greenfield planting. So that's to put it in perspective, to have that be undertaken required 120 individuals or planters out on the hill face every day, and they're averaging 75 to 80,000 seedlings planted per day as over that season. This year it commenced on the 10th of May with containerised seedlings, and we finished the planting the 12th of September at Kinloch. We've seedlings were sourced from the multitude of nurseries, or 6 in total, and we're predominantly open pollinated stock. For those who may follow the forestry circles, this year has been difficult for some of our nurseries on the back of New Zealand's wet spring, summer, and going into it with the low sunshine hours, some of the nurseries struggled to be able to meet the seedling specifications. And so in the early parts of our planting, before we even commenced, was quite a task to try and source the number of seedlings needed that met our requirements and specifications. During the season, the sunshine hours came through, and we managed to have the seedlings provided to the specifications that we require them to be grown to. So that's just a little bit, I guess, about us, and I'll go into the individual properties now. If you want to go to the next slide, Sean. So Tikawawa, you would have seen the metrics on the page before. It's located 53 kilometres northwest of the Gisborne port. There's a total net stocked area of 488.8 hectares. In 2022, we established 337.5 hectares, and this year concluded with the redwoods of 40.9 hectares. Hopefully you can see that on the screen. And we were there. Those seedlings, redwoods, were sourced from Curry Park in Northland, and they were planted at 1,000 stems per hectare. The subdivision has been completed, and that recently sold for $900,000. Was an area of 19.4 hectares. Tikawawa has currently 87.4 hectares registered in the ETS. These were areas that were part of the transfer from the previous owner. FMNZ will be looking at entering this Tikawawa property into the ETS this year. Planting took 2 days at Tikawawa and was completed on the 10th of August, and the release for spot spraying has been completed there. So on to Matawai Hills, which is located 31 kilometres northwest of the Gisborne port. Total net stock there of 110.7 hectares. In 2022, we planted 23.6 hectares Pinus radiata and 75 hectares completed this year over 4 days, and was at an average stocking of 826 stems per hectare. The seedlings planted there were from Cambridge Nursery, and spot releasing has been completed on Matawai Hills. You want to go on to the next one, please? So airstrip, that is 62 kilometres east of the port of Tauranga, 366.4 hectares all Pinus radiata, and 288.8 hectares was planted this year. We used 2 crews to complete this work over a period of 14 days, and that was finished at the end of August. We had seedlings from Puha Nursery, Cambridge, and Northern Forest Nursery, and they were stand select, control pollinated, and open pollinated seedlings. The stocking averaged 817 stems per hectare from the plots, which was within our 5% tolerance, and spot releasing will be undertaken within the next 2 weeks. During the pre-planning, we completed an archaeological assessment, which was undertaken by CFG Heritage, and the archaeological sites were identified in the field with markers to ensure they were not planted through, and they were identified typically as pits and terraces. The subdivision survey is underway currently. Move on to the next one. Goldstone, located 58 kilometres north of Napier Port. Planting of the 2023 area was completed this year of an area of 183.6 hectares. 2 seed lots were planted. These were stand select from Puha Nursery and open pollinated seedlings from Murray's Nursery, with an average of 835 stems per hectare being achieved. This was completed at the 31st of August, and it took 7 days to plant this property. The subdivision process, the surveyor has been engaged and is working through that process currently. While still on Goldstone, 87 hectares is registered in the ETS. These were the 2020 plantings and were transferred as part of the sale and purchase from the previous owner. Okay. Yep. Ngātoka is 129 kilometres east of Wellington Port and 30 kilometres from Masterton, where there is also an inland rail port. 136.3 hectares, as shown on the screen, was established this year. The remaining area of 47.9 hectares will be established in 2024. We're just undergoing the afforestation resource consent for the remaining area. The area planted in 2023 this year do not require a consent. The application process is with Greater Wellington Regional Council. Unfortunately, that consent didn't come through in time to plant it this year. Ngātoka took 2 days to plant with 3 planting crews, and the seedlings were open pollinated and stand select from Abergene and Nelson. The average stocking achieved there was 835 stems per hectare. And finally, the Kinloch property, that is 98 kilometres south of Napier Port. 197.5 hectares was established this year. We had 2 crews in that property, and that took 8 days to plant, and this was concluded on the 12th of September. We used containerised seedlings in Carey Park to ensure they got the best start possible, and there's an area of quite large Lombardy poplars that we need to treat with helicopters or aerial spraying, and so we held back this year from planting so that they could be done in a cost-effective manner. The 131 planting plots were established, and they were established at 830. Achieved an average stocking of 834 stems per hectare. Spot releasing will be undertaken in October. That's, I guess, a very brief rundown of the properties. We'll have to take questions at some point.
Yeah, thanks, Rory. Just a question for, I guess, from our investors' point of view. Obviously, a lot of plantings happened this year. From their perspective, when will those plantings start to generate, carbon credits, and what's the normal timeline there?
Once registered in the emissions trading scheme, the properties generate carbon credits from year 1. The large proportion of those carbon credits actually come in year 5 under the typical lookup table system. Thanks.
And Jeff, maybe just want to run us through, obviously some of those properties got fairly large subdivisions. Run us through that.
Yeah, sure. So the properties that we purchase, can be bare land without dwellings or buildings or productive land on them, but some have dwellings, full farms, and have productive land that is more suited to remain in farming or in lifestyle versus forestry. So when we acquire a property, we go through a subdivision plan, and as Rory alluded to there, we have 2 on the go, and we've actually just completed the sale of the Tikawawa homestead and quarters as well. So that sale went through and was just slightly ahead of budget as well. For the likes of Airstrip, there's 3 dwellings on the property. There was also a flattened area next to the Airstrip of around 12 hectares, which the vendors had hoped to put into horticulture, and have spent a lot of money on an irrigation pond as well. We're turning that into a 7-lot subdivision, so it's a reasonably intensive subdivision plan, but we hope to obviously net back a reasonable amount for that, and to take that effective or dollar per effective area, dollars per effective area as low as possible.
Yeah, thanks. And moving forward, Steve, would you like to just run us through, the current log market and what we're seeing?
Yeah, certainly, Sean. Good morning, everyone. Just talking about, firstly, our planting season before I whip into these markets. The logistics of such an operation, just over 7,000 hectares is hugely significant, and is an absolute credit to our forest management team. They generally do, 6 days a week, long hours, and completely dedicated to the task at hand. So absolute credit to them, and we can't underestimate how, such a big season. It's just over 3,000 hectares bigger than we've ever done before, and this is my 32nd planting season. Anyway, thought I'd just say that. Log markets, I've been asked to talk a little bit about log markets. I'm going to talk a little bit firstly about back to 2016 and the market influences in that market, the current market, and then I guess just a general kind of what does looking forward represent in my view. So this graph that you can see in front of you, you can see around that 2016, from 2016 on, we had a relatively buoyant log market with, log prices up around the, 140 range, at Wolfgate range, and that the log market all revolves around the A grade, and then you have fluctuations around that A grade log, varying between your top pruned grades quite often up at around that $180 a mark, versus your lower grades that'll come down off a 140 at about that 118. So variation of log grades, but we measure the market on the A grade 3.9, so that's what this graph represents. But as you can see, it was relatively buoyant between 2016 and 2019, and in 2019, on the back of initially, a lot of extra volume coming in from Europe on the beetle infestation that they had over there, coming into China, dropped that market. Then as it rose up, we had COVID turn up, and there was a sharp drop down to near $100 in late 2019, early 2020. From that point, everything in New Zealand stopped. We were obviously locked out of the forests. There was concern with that, and as soon as we came back, there was a massive spike back up, just over the 150 mark. So, quite an influence on the back of COVID. And then ever since then, we've had this seesaw effect or roller coaster ride of combination of COVID, global impacts on the back of COVID, and markets going up and down. And we've seen that significant rises and falls in that period, which has been a little bit unsettling. Currently, we're sitting at around that 125 mark. Our markets are in the short term stable, but we're all relatively concerned about what's happening in China. China is the largest market for softwood out of New Zealand, and will continue to be for the short term to medium term. There is other markets, that are slowly emerging. But if I focus on China, we've, influencing factors on our at-wharf gate price are obviously freight vessel rates, exchange rates. During that period between 2016 and 2023, we've seen freight down as low as $20 US per ton, up to the early $80 US per ton. So quite variations. At the moment, freight is relatively low. It's sitting at around that $28 to $32 per ton. And however, with increased oil costs and fuel costs, it is slowly rising. Exchange, New Zealand exchange is sitting at about 0.59 against the US, which is a positive. That has come down a little bit and which has helped hold that at-wharf gate New Zealand price in that mid 125s to 130s. What's happening in China at the moment? We're seeing, this is based on our largest exporter, because there's different metrics depending on which exporter you use. But with the information that's coming in from our largest exporter, at the beginning of August, there was about 3 million jazz sitting on the ports of China, the ports that they monitor. Logs are measured in jazz, which is a cubic meter measurement based on small end diameter. Okay, so at the beginning of August, there was 3 million tonnes. At the end of August, that had dropped to about 2.6 million tonnes. And that's on a daily offtake of about 60,000 jazz per day. So the incoming volume has reduced, I guess, to bring it back to that 2.6, and that based on that metric, 60,000 a day, that's about 43.5 days of logs supply for China, which when it gets under 45, it's seen as low, and there's a little bit of concern about when the logs are coming beyond that point. So that's a slightly positive signal. But in the short term, there is concern over the economic, I guess, impact that's happening in China. Log markets looking forward. As I said, there's a little bit of hardship with the economics, low GDP in China, but log volume, the demand for wood, is primarily driven by population growth. And, the population sits at about 8.1 billion at the moment, and it's forecast to hit about 8.5 billion by 2030 and 9.7 billion by 2050, so that, with that correlation between, wood demand and population, we see that as a positive sign moving forward. Other significant global impacts that directly impact wood availability. In 2020, we had the Australian Black Sunday fires that burned 8.5 million hectares of bush, trees, and plantation forestry, of which 130,000 hectares of that was radiata pine. In North America and Canada more recently, in 2023, 16 million hectares of forests, spruce, Douglas, etc., burnt, and in 2022, 8 million hectares. So that's going to have an impact on wood availability going forward. I mentioned the European bark beetle when I was talking about the graph and the first drop early 2019. The salvage of that has peaked, and so that is drawing back. Russian volume heading into China, obviously on the back of the Ukraine war, that has reduced, and the Russian volume in general is I guess moving further north away from China. So that's having a reduction of volume going into China. And then lastly, I guess the Indian market. We've had a hiccup here in New Zealand of getting wood across to India on the back of our fumigation rules that have changed more recently with methyl bromide and their photosanitary requirements in India. So once that is worked through, more volume will head into India. And we also know that in South America, which largely feeds India, their volume has peaked and is coming back. So these are, I guess, positive signs, I guess, moving forward for certainly the New Zealand wood market. At the end of the day, my view is, forests are our most natural resource, and we're in a world of increased population, and our environmental awareness is certainly on the increase, particularly when it comes to native forests. So commercial forests are going to be a vital and valuable commodity going forward. So my outlook.
Thanks for that, Steve. Yes, certainly the graph there and the short-term market could be interesting. That's for sure. Hi, everybody. My name's Dickie. So just to follow on from Steve there, the Awatea Forest Fund is currently not harvesting any trees. At this stage, the focus of the fund, as you've heard, has been on acquiring greenfield properties for their initial carbon availability. Across the 6 properties that the fund does own, there are some areas of existing older trees that will be intermittently harvested over the coming years. Excuse me. In each of the forest cash flow models, the independent consultants use an uninflated 5-year rolling average log price. So this takes into account the volatility that we've seen in the graph on the previous page. And as I said, because of the structure of the fund and its focus on newly established forest, most of the harvesting will be from year 20 onwards, with the majority of income derived from carbon in the short term. So forestry is a long-term investment, and our returns will focus on the long-term outlooks and fundamental drivers for forestry. And the demand for sustainable production forestry is positive. Wood's used to build houses, to power heat and electricity grids, for clothing, for package deliveries, and more to replace plastics, steel, and concrete as a low-carbon economy moving forwards. Domestically, the Minister of Forestry, through the New Zealand Forestry Service and the sawmilling industry, has presented a transformational plan with emphasis on creating a high-value and resilient forest and wood processing sector to underpin this low emissions future. In a nutshell, that program intends to add value to value-add timber products to our domestic and international markets. The markets for biofuels is also becoming interesting in our lower grade logs. As the price continues to rise, there could be opportunities to increase the value recovery on some of these lower grades and create revenues for what would have otherwise been harvest residues. Obviously, we're strong supporters of any additional revenue streams or value-add processing in New Zealand. These factors, along with economic growth, population growth, as Steve's talked about, the drive to net zero, are, according to the World Bank, likely to create a 4-fold increase in demand for timber between now and 2050, the time that our forests planted today will be ready for harvest.
Yeah, thanks, Will. And Steve, if you're still there, just a question from one of our investors. Are there any options moving forward to reduce our reliance on China?
I mean, that's been talked about for many years. Look, there are things that are happening, but it's still on the back of China a little bit. China's currently investing in Southeast Asia, places like Vietnam, Cambodia, etc., for cheaper labour rates with sawmills and infrastructure or process facilities. So you may find that logs will end up getting more into some of those countries. Obviously, our domestic market is a key, but we all hear the media comments around supplying local, but in reality, our domestic market is predominantly pruned lumber. Okay, so here in the Hawke's Bay, we feed when the Pan Pac mill is up and running. We feed generally about 18% of our volume into that domestic market. So unfortunately, in the short term, there's, China, I guess, is the key player, but it is a concern for everyone to rely wholly on or have a monopoly in that regard. But I guess there will be, over time, there will be new emerging markets, and there's still positive talks, or more positive talks, about India, but India has been an emerging market for years. It's just such a fragmented industry over there. So, yeah.
Yeah, thanks. All right, so we'll obviously jump to carbon markets next, and Will, do you want to do the breakdown of how that looks?
Awesome, thanks, Sean. Right, so when we launched the Awatea Forest Fund, the price of carbon was in the mid-$70 range. Over the last year and a half, we've seen a lot of volatility in the market, including a record high there of $88.50, and then a low down under $40. The price today is sitting back at around $67. In recent months, we've seen the High Court rule against the government, stopping them from restricting the ETS price settings to use as a tool to mitigate the cost of living crisis. The ruling has paved a way forward in how the ETS will help us meet our 2050 climate obligations. Quarterly throughout the year, the government has been auctioning reserve NZUs from their stockpile. Those auctions have not had enough bids to secure all the units above the reserve price. This means that none of the units are sold, and that at each successive quarterly auction, there is an additional supply from the previous auction that must first meet the reserve price to all be sold. There is now a good chance in the fourth and final auction of the year that they will not receive enough bids above the reserve price, meaning that all the NZUs offered from the government auction throughout the year are removed from the market permanently. This shortening of supply would obviously be great for our forestry units, as there's less available overall. Next slide, please, Sean. There. So recent government announcements and the adoption of the Climate Change Commission's recommendations show the cost containment reserve bands moving materially higher from December this year. So from the end of the year, the price floor, which is the grey line at the bottom of the graph there, is going to move from $30 to $60, and the cost containment reserve, which is the blue line, is going to move from $82 up to, it's a dual cost containment reserve with the lower band at $173. So this paints a very positive picture for carbon, and is especially helpful as there is an ETS review currently underway. So we've recently met with Dr. Rod Carr, Chair of the Climate Change Commission, and the forestry ministers from both major parties, and all of those individuals have stressed the importance of a sustained supply of timber and NZUs from forestry through until 2050. Signals from the government, as Jeff's previously mentioned, indicate that existing established forests will be grandfathered and able to participate under the current rules. In the early years of the fund, the cash flows are strongly correlated to the price of carbon, and these positive signals have been the drivers to establish the additional 3 properties in this planting season. All 6 existing properties are being registered into the ETS over the coming months. Each year, the Ministry for the Environment updates the country's 5-year forecast demand for NZUs. It's showing a material shortfall availability of NZUs to meet our short-term emission offsetting obligations. And in a recent review of our emissions trading scheme by the IMF, the International Monetary Fund, their forecast predicted that our NZU price needs to reach US $100 or Kiwi $165 by 2030 to encourage our emission reductions in line with our Paris Agreement obligations. So with the AFF's ability to create NZUs for a net present value of around $25, the fund's well poised to capitalise on the government price controls and projections.
Yeah, Will, just a question here. Can you just explain grandfathering?
Yeah, so the rules, the ETS is under review where they want to ensure that the future supply of units from forestry is limited. So they've come out and said that while they're reviewing the rules moving forward, it's not going to affect any properties that are planted and established into the ETS at the moment. So We think that's going to be a cut-off and perhaps at the end of next year's planting season, but we've made sure that all the properties that we have are planted this year and established in the ETS and will operate under the current rules.
Thanks. So now obviously moving forward, we'll take a look at the outlook for the fund and how it's going to look moving forward. Jeff?
Yeah, hello. G'day. So this slide here just gives you an idea, I guess, of the cash flows that we're looking at. This cash flow is the combination of the 6 independent feasibilities provided, so aggregated into a portfolio, and this is based on a $70 carbon price and the 5-year rolling average log price. So as we see there, very broadly, that there are buckets of revenue, and the fund has intended and intends to begin distributions in the 2025 financial year. We hold a good supply of carbon credits on hand at this stage, so we expect that a number of those would be used in the initial distribution, and then as carbon credits come online, this will increase, and we begin to see in the buckets, especially in those 6 to 20 year buckets, good supply of carbon coming through. Lull in that sort of 21 to 25 periods, and then a pickup as harvest commences. So the idea, this is just this first 6 properties, and I must stress this is purely indicative, and is from the base case feasibilities. The idea of the fund is to acquire properties, to fill gaps, in the buckets where cash flows are lower. So, we begin to focus on other properties with different characteristics, whether it be longer carbon tails or harvesting in different time brackets. You just want to go to the next slide, Sean. So, look, in terms of the outlook and for Awatea, the track record that we've set so far is, I think we've seen a real proof of concept here that the fund is achieving what it set out to do. A diversified portfolio of assets as well. When we look at weather events and the likes, is having that desired outcome. I think also, going forward, it's really a continued emphasis on quality forests that we're putting into the fund. And I think Roger's listening online, but we've learned a lot since the establishment of Awatea NZ and FMNZ as well about what makes a quality property. And we intend to stick to those and the properties that we review and the properties that we purchase. As you've heard from Steve and Will as well around log markets and carbon markets, the fund really aligns very well to what those outlooks are. In the shorter term, there's more carbon cash flows, and that emphasis, for a higher carbon price going forward. And certainly the long-term outlook for log prices, we believe is robust, and much of the harvest that we see will start to step in 20 years and beyond. But going forwards, we will be stepping back into capital raising with the recent acquisition of those last 3 properties. It's important for us to continue to raise capital, to be in line with the acquisitions, and to help with continued expansion, to make sure that we can take advantage of opportunities that we're seeing in the market. In terms of what we're next looking at for the fund, those investments we expect will change a little bit. We are really pro redwoods. As you know, we planted 41 hectares on Tikawawa this year. We would like to acquire a property, most likely in the King Country or North Taranaki regions where redwoods grow very well. This would supply diversification in terms of species, but also wood products carbon cash flows, etc. So, and to mention as well, redwoods have a fantastic, environmental impact as well. As well, we will focus on different age class distribution as well. So existing forests to really bring in, a more balanced approach to harvest versus carbon. Look, I guess to finish off, we thank you for your ongoing support, and we really look forward to establishing the fund in the many years ahead for this. It is a long-term investment, and we think the opportunities are great for the fund.
Yeah, thanks, Jeff. We've still got 3 or 4 minutes for a few questions, so if you've got any questions, feel free to send them in. Firstly, we do have a couple of questions here. I mean, obviously, all of our Awatea investors now have received an email about the fire and windthrow cover. Just one of you want to run us through what that looks like?
Yeah, I think the question here is, will Awatea use the discretionary trust for insurance? Well, the first up answer is that's up to vote for Awatea, and that's what we're currently going through. Look, just to describe it briefly, the insurance terms that we've seen have really deteriorated over time, to the point that there hasn't or wouldn't be many cases in our history of claims that would meet the thresholds to claim under insurance. The expense of it, but also the excesses that are required. And earlier this year, in terms of the cyclonic events and the damage that we had, still wasn't enough to claim insurance, and this year is no different. In fact, the insurance terms we face offer less cover and are more onerous. As well, insurance does not want to cover trees that are between the ages of 0 and 3, which would be obviously very detrimental to Awatea, given the greenfield nature of our plantings. So, look, we have, I think probably first and foremost, we wouldn't have put the discretionary trust together if we didn't feel we needed to, but insurance has got to a point now where we feel it's prudent to come up with another option. And having such a large supply of forests that are all, a lot of them are diversified across regions, it's not all contiguous, means that we can put together a scheme which is meaningful, and so we believe that we've done that. The voting at the moment is very strongly for the scheme, and that's across all of our partnerships and Awatea. I think Awatea might require a few more votes to get across the line, but overwhelmingly in favour of discretionary trust from what we've seen.
Yeah, thanks. And Will, maybe a question here for you. Obviously, we've only got a couple of minutes, but will National's announced policies mean anything for future Awatea forest developments?
Yeah, good question. So National's come out with a bit of a moratorium on whole farm conversion to pine forest. The exception is that they will allow up to 15,000 hectares of land class 6 and below to be converted into forestry. As it stands, that's with no restrictions on class 7 and 8 land. The 15,000 hectares is actually in line with our current, or New Zealand's current, run rate of class 6 and below land conversion to forestry. So yes, they've put some rules in place to appease the farmers and on some of the better classes of land, but we don't think it will affect our ability to convert land for forestry. We must be 90% 6, will we?
I think no. I put it in context. We are predominantly 6 and 7 land use classes that we use. I think perhaps sitting around 60% 6 and sort of 40% 7, or with some other residuals. The other important thing to note about national policy, and has actually been a big advantage to us, is they've also talked about banning overseas investment into conversion forestry. And this has created some really good opportunities for the fund. and that has been incredibly beneficial for these more recent acquisitions.
Great. Well, I think that's probably all we have time for. So if you do have any questions after this, you're welcome to get in touch with any of us. And our contact details will be, in the email, and most of you probably have them by now, but we'll send out the recording, the presentation and everything in the next coming days. But again, thanks everyone for joining. It's obviously been a great year for us, and everyone's excited moving forward for what lies ahead. And thanks for coming on the journey with us.
That's Sean being the salesman there who'd like you to invest more. So please do.
Awesome. Thank you. Guys.